Ladies and gentlemen, good day and welcome to the Q2 FY24 results conference call of Gravita India Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sabri from Emkay Global Financial Services. Thank you, and over to you, sir.
Yeah, good morning, everyone. On behalf of Emkay Global, I welcome you to the Q2 FY24 post-earnings conference call of Gravita India. We have with us the senior management of Gravita, led by Mr. Yogesh Malhotra, Full-Time Director and CEO, Mr. Vijay Kumar Parikh, Executive Director, Mr. Naveen Prakash Sharma, Executive Director, and Mr. Sunil Kansal, Chief Financial Officer. So today, the management will give a brief on the results, and then we'll move over to the question and answer round. So without any further delay, now I invite Mr. Malhotra for the opening comments. Over to you, sir.
Thank you, Mr. Sabri. Good morning, ladies and gentlemen, and welcome to our Q2 and H1 FY24 earnings call. I believe you have had an opportunity to review the earnings presentation and financial results that were uploaded on the stock exchanges. Before opening the floor for questions, I will provide a brief overview on the major highlights of the quarter. I'm very happy to share that Gravita has delivered stellar performance on both financial and operational fronts for Q2 and H1 FY24. Before we delve into the results, I would like to share some strategic highlights and project updates. I'm pleased to announce that ICRA has upgraded the credit rating for both fund-based and non-fund-based facilities. Long-term rating has been upgraded to A+ stable from A positive. For short-term rating has been upgraded from A2+ to A1. Gravita's step-down subsidiary situated in Togo, West Africa, has started commercial production of battery recycling from its existing recycling plant, having an annual capacity of 6,000 metric ton per annum. I would want to highlight that the company has been sourcing scrap from Togo yard for the last 3 years and has set up a strong scrap connection network before establishing the plant there. Further, the company is already having aluminium recycling plant having an annual capacity of 4,000 metric ton per annum in Togo, West Africa, and this new facility will enjoy the benefits of economy of scale and will be cost effective due to savings in logistic costs. Now let's discuss the operational performance. Coming to the capacity expansion, as on 31st October 2023, Gravita has expanded its total capacity to 2.84 lakh metric ton per annum compared to 2.33 lakh metric ton per annum on 31st March 2023. We are strongly progressing towards our target of reaching the existing vertical capacity of 4.25 lakh metric ton per annum by 2026. Excuse me. Gravita is committed to expanding its capacity and hence is expecting to incur a capex of more than rupees 600 crores by FY26 for its existing as well as new verticals. Capex expected for existing and new verticals is approximately 350 crores and rupees 250 crores respectively. The company has witnessed a volume growth of 14% in Q1 FY24 on a year-on-year basis. We are seeing major volatility in the commodity place, and some demand slowdown is also visible globally, especially in China. In lead, because of a strong relationship and OEMs across globe, the back-to-back hedging mechanism, we are able to generate volume growth along with sustainable margins. In case of plastic and aluminium, we are still in the process of developing OEM's approval and working on hedging options which will stabilize the margins with sustainable volume growth in these verticals also. Moving to financial results, let's discuss the half-yearly financial results. Consolidated revenue for H1 FY24 increased by 22% to rupees 1,540 crores, and 48% of revenue in H1 F124 came from value-added products, aligning with our vision of achieving 50% revenue from this category. Consolidated adjusted EBITDA for the half year stood at rupees 160 crores, that is up 23%, and consolidated PAT showed an increase of 26% to rupees 110 crores in H1 FY24 from H1 FY23. PAT margin increased to 7.1%. ROC for H1 FY24 stood strong at 26%. Cash and cash equivalents of the company have increased to rupees 118 crores as liquidity for future capex and working capital. Coming to quarterly financial results, at consolidated level, revenue for the quarter increased by 22% and 19% to rupees 836 crores on a year-on-year and a quarter-on-quarter basis, respectively. 44% of the revenue in Q2 FY24 came from value-added products and 39% revenue came from overseas business. On a year-on-year basis, adjusted EBITDA increased by 23% to rupees 80 crores. EBITDA margin stood at 9.5%. Gravita reported a consolidated PAT of rupees 58 crores with a 30% and 11% growth on year-on-year and quarter-on-quarter basis, respectively. PAT margin remained steady at 7%. That's all from my end. I would now request to open the floor for questions and answers. Thank you, and over to you, Sabri.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Rahul Bangadia from Lucky Investment Managers. Please go ahead, sir.
Thank you for taking my question, sir, and congratulations on a good set of numbers. Two questions. One is on the lead side, things seem to be, on track and they seem to be trending towards what we had guided for. But aluminum and plastic volumes seem to be struggling. While you touched upon it in the initial remarks, but if you could just give us a better insight into what do you think is happening, what is happening there, and what do you think you will do to kind of improve the trends that are visible right now?
Yeah, sure, Rahul. So as I mentioned in the comments also that there is huge volatility in the metals or commodity market. The prices have seen, it has come down drastically, especially in aluminium in the last year. And because we are not hedging, there is no hedging mechanism currently, so you could see the effect on the bottom line numbers of aluminium. And also because of this huge volatility, and also there is some slowdown in demand, as I mentioned in China especially. So our Indian operation is not running optimally. So that is why you see some issues in aluminium EBITDA margins and aluminium volumes also. We see, there is a possibility that this will continue for another quarter, but by the next quarter or at the most by year end, we'll see some stability in these markets also. And we are also working on some mechanism for hedging for aluminium as well, as I mentioned earlier in my earlier calls as well. So hopefully that will be also in place by the end of this year. So once these two things happen, I think we'll be in line to grow in aluminium also in the same manner as we are doing in lead.
And plastic, sir?
Plastic, there is a slow. You could see because we closed down our plant in Nicaragua last year, so the effect is primarily because of that. But we are increasing the capacities in wherever other plants are there, because that was one of the major plants where we sold off. So you could see some negative growth there. But otherwise, if you look at the existing verticals, we are at par with last year.
So so maybe the existing sites are working at par with last year. How much would have Nicaragua, the shutdown plant, contribute to the volumes in plastic?
So it's around, just one second, it's around 1,000 tons per annum, in this quarter, sorry.
So 1,000 tons per quarter is what that shutdown site used to contribute?
Yes.
And besides that, you are saying essentially then we are flattish?
Yeah, we are flattish.
But then, sir, besides lead, we need the other guys also to start growing, and we also, and if you also could touch upon what are the developments in the newer verticals on rubber and other places.
Rubber is doing well. We have increased our capacities in Ghana. We have also increased capacities in Tanzania. Senegal plant is also coming up. But it does not reflect on the bottom line per se, because all the consumption from the material is in-house only. So it gets reflected in the profitability of other verticals wherever we are using rubber as raw material. Apart from that, we have already applied for consent to establish a plant for lithium-ion battery recycling at Mundra. We're waiting for the approvals. Once that comes through, we'll start setting up plant there. Paper also, hopefully in next quarter or a quarter next to that, you'll hear something where we'll start setting up a plant in Central America for paper also. So these two verticals, we are very confident that we'll start putting up plants, we'll start establishing plants in this year itself.
Okay. I'll come back for more questions, sir. Just a final one. Given the slight challenges that you're witnessing in aluminium and plastic for varied reasons, do you still think you'll be able to go by your guidance that you have, of course, reiterated in your presentation as well?
Yeah, so these are only short-term setbacks. Actually, if you look at the prices of aluminium, once they stabilize, I think we are good to go. Our capacities have increased, and in the long term, if you look at it, we are very confident, because the overall recycling space is growing very fast, and we see a very good ecosystems in both these plastics especially, and in aluminium also. And that is why we are increasing our capacities. These are only short-term setbacks, and especially because currently there is no mechanism for hedging. You would see these effects on a quarter-to-quarter basis, but if you look at the same time last year, you would have seen some increase in EBITDA margins in aluminium also, because the prices are going up. So once these prices stabilizes, we'll come back to the same EBITDA numbers.
Great, I'll come back for more. Thank you so much. Thank you.
Thank you, sir. The next question is from the line of Mr. Dhruv from JMFL. Please go ahead, sir.
Yeah, good morning, sir.
Good morning.
Yeah, sir, my question is related to the long-term debt part. The long-term debt has increased from approximately 90 crores to almost 325 crores. So what is the reason for this increase in debt?
Sure. So basically, we have taken some long-term loan in the overseas subsidiary in Netherlands, which is we have taken it from some ESG European funds, where the working capital and the capex needs of the overseas business is planned to met by these ESG funds. So that is the reason where we have increased the long-term debt and reduced the short-term debt. So earlier, overseas business was being funded from the working capital from the Indian facilities. But since we have taken this facility for the overseas business in overseas itself, now Indian working capital debt is slightly reduced. So that is basically, and some part of this long-term loan is already kept as a cash and cash equivalent in the overseas, where it will be utilized for the future capex and the working capital needs.
Sir, from which entity have you taken this loan?
Netherlands.
So we have taken it in the Netherlands subsidiary, and the overseas lender is Proparco and OEB. These are the two overseas lenders, ESG funds. Their mandate is to fund the overseas African business in the recycling space.
Okay, and what is the rate of interest on these loans?
So rate of interest is slightly lower than the current working capital loan facility we have taken in India. So Indian facility we are taking at around 8, and this facility comes at around 7 currently.
Okay, overseas are at 7.
Yeah.
Okay. Okay, sir. Thank you so much. I'll come back in the queue. Yeah.
Thank you. Before we move on to the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Satadru Chakraborty from Chakraborty Family Office. Please go ahead, sir.
Yeah, hello, good morning. Congratulations on a good quarter. My first question revolves around the net working capital cycle. So I think the inventories, the payables look good. My question really is on the receivables. So there is a sharp jump, and I see that cash flow from operations is significantly down because of that. Can you give me a bit more insight on what exactly is happening? Is this one or two large customers who are not paying, or is this going on credit? So what exactly is causing this jump?
So, yes, on the 30th September 2023, this number was exceptionally higher because of some additional volume dispatches in the last few days of the quarter, just before the quarter end, and this money is already live in the current month. So it was exceptionally high just at the quarter end, but it is already at the normal level at this point of time. So normal level is close to 150 crores, but yes, it was higher on the 30th September.
Okay. Any notional idea on how many days this is in terms of receivables for this quarter versus the last?
Yeah. So normally it is in the range of around 20 days, 18 to 20 days, but exceptionally higher because of, as I explained, so it was around 25 days, slightly more than 25 days.
Okay, understood. My second question is a bit more nuanced one. So in the result sheet that you have presented, there is a point number 6, which says there is an appeal received by the Commissioner of Customs, Jodhpur, of around 70 crore. And you're saying for the moment being, you have a good case and there is no provisioning. And there is just one line which mentions that in case any liability comes on the company is entitled to take credit of the tax amount. So I'm not very sure I understand this last line correctly. So what you're trying to say is if the liability comes, then our revenues will go down and then the tax that we have paid is more, so we can get a credit of that tax amount. Is this what the strategy is so far?
So, as mentioned, this is a pre-import condition where we need to deposit certain the demand which is in the form of GST. So whenever we deposit this amount in the form of GST, it is available as a credit also for us to be taken for the future GST payments. It can be adjusted for the future GST payments. So still we are under appeal. We are not. We are saying that we are not. This case is not applicable on us. But if, as mentioned, if we are not, if the case is not in our favor, we have to deposit this amount and we can take a credit of in the future GST payments for this amount.
So in other words, it will affect the cash flows for the time being, but it will not have any financial impacts in the longer terms.
So that is the reason where we have not taken any provision on the company's financial.
And further add to this, the judgment was given before the guidelines came from CBIC. The CBIC guideline says that only the cases where this pre-import condition was violated, that only will be, the GST has to be deposited, while the Honorable Commissioner considered the entire period as a violation. One part is this, so this number will reduce to less than 10%. And second thing is that when we have gone to the appeal for the tribunal, so there we are telling this is a bona fide case, not a mala fide one, wherein this cannot be raised on us over after a period of 2 years. So these are two other scenarios which are already there.
I hope we have answered your question. or do you need some further clarification on this?
No, I think this is quite good. Thanks for this. The last question I have really is on the upcoming diversifications. Any sense on what exactly is the company and the management trying to do about the lithium ion recycling? Because I know there is a lot of scope for this in the market, but not really big players coming on this.
Yeah. So as I mentioned earlier, answering some question, that we have already putting up we have plans to put up a lithium ion recycling plant, a pilot project in Mundra, and we have already applied for consent to establish a plant in Mundra. We are waiting for the concerned authorities to approve that plan for us to start putting up a plant there. So hopefully we'll get that consent in the next quarter, and then we'll start putting up a plant upon lithium ion recycling in Mundra in this year itself.
Okay, one additional follow-up, just taking this further, I don't think there is any hedging mechanism in place that you can afford to do with the lithium metal, the way it stands now, right?
No, for all metals, there is a hedging mechanism. It can be traded on exchanges. There is LME, London Metal Exchange also, and then there is the metal market.
But lithium ion, it's getting in formation because SHFE, China is a major lithium supplier, these battery suppliers. So there is some mechanism which is being developed. But since these batteries availability is very low, and we expect that more volumes to come by FY26-27, then this particular hedging will also be evolved over a period of time.
Right. Thank you, gentlemen. All the very best.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question is from the line of Mr. Parikshit Kabra from PKD Advisors. Please go ahead, sir.
Hi, thank you so much. Congratulations on your results. Great set of numbers. I wanted to touch upon something that other people have already touched upon, is basically the lithium opportunity, but not from the angle of recycling lithium, but this is obviously going to impact the lead market as well. Maybe not in the next couple of years, but maybe in 5 years, 6 years. So I just wanted to get a sense from the management, over the next 5 to 6 years, how do you see the lead market, total addressable market evolving, and Gravita's market share within that?
I think although it may affect the lead market, it will not affect in a big way, because a lead acid battery is used for lighting, ignition and starting up. So it's a SLI battery that you use, whereas a lithium ion battery is a traction battery which is used to drive the car. So even in a electric vehicle, you would require a lead acid battery, although the size of the battery is smaller. The lithium ion battery replaces the IC engine part.
So it may stop there. I know this has been the line for a while, but we know that the consumption will significantly drop, right? Not only because
yeah, so it will be, the size of the battery would be, say, around 70% of the size of the battery that is getting used currently in IC engines. So but at the same time, because it will take some time. I think what you were mentioning about in the next 3-4 years, it will replace lead acid battery, or the EVs will replace the IC engines. That would happen probably in the developed countries, but in countries where we are present, I think most of the applications would still run on IC engine is our take. But we've mentioned earlier also that it doesn't matter whether lithium ion battery comes in place or maybe some other technology comes in place. Our business is recycling business, where the ecosystem is more important, procurement is more important than the technology. Technology can be bought, but the whole ecosystem of procuring material, processing it, and then supplying to the OEMs, that ecosystem is much more important. So although the lead acid battery may come down in future, we believe that recycling of lithium ion battery will present a much larger opportunity for us to go into.
No, absolutely, and that makes sense, right? When we diversify, we can go into other segments, and I completely appreciate that. So this is not a take on Gravita as a whole. I'm just trying to understand the lead market as a vertical, how we see the lead vertical evolving over the next 5 to 6 years. Gravita may obviously create multiple new businesses, and that's great. But how will the lead business evolve over the next 5, 6 years, in your opinion?
Yeah, as Yogesh rightly said that lithium-ion battery is the upcoming market, and undoubtedly it is going to take some space out of the Gravita's recycling diagram. But if you see in lead space also, we have hardly 2% of the global market share. And if we slightly increase our global market share,
Entire market.
Okay, I'm sorry. Because in case of Gravita's perspective, we see that we will position ourselves more in global market to sustain the volumes of lead. But yes, in times to come, as soon as the lithium ion increases, it will take the space from the lead space.
Yeah, so to answer your question, yes, definitely there will be a hit on lead acid battery manufacturing if all the IC engines would get converted to EVs. But then there are other opportunities also coming. Stationary batteries, I think, battery for power generation is also another power storage is also another application that is there. So overall, probably in the mobility business or in the cars automobile battery section, lead acid battery may go down, but there are other applications for lead that are still growing. We are talking about cable industry, which is using lead as a sheathing mechanism, which is also growing. Then there is radiation industry, X-ray machines, and nuclear power plants. There are various other applications for lead which are also growing at the same time. So overall, we are very confident that the lead as a commodity, there is very little chance of it going down because of the other opportunities that are available for this.
Okay, great. Thank you so much. Thank you for taking my question.
Thank you, sir. The next question is from the line of Mr. Rahul Soni from ICICI Bank Limited. Please go ahead, sir.
Hello, am I audible?
Yeah, please.
Yeah, thanks for giving me an opportunity. Sir, my question is on the procurement side. Sir, I want to know what percentage of your raw material requirement like scraps for lead and aluminium you procure from globally, and at what discount to the prevailing LME prices. And thirdly, I want to know what is the power cost for smelting of lead and aluminium and compared to the recycling of the same.
As compared to the?
As compared to recycling, what is the power consumption in the
if you mine
smelting of this?
As compared to recycling, right?
Yes.
Yeah. So to answer your first question, you were asking about the price of battery that we.
Yeah, percentage of your total raw material procured from globally.
Figure that whatever batteries we are importing in India is somewhere in the vicinity of 50 to 55% of the LME prices.
Okay.
Right. So, but the lead content in that battery is around 60 to 65%. So you will probably get the picture. So it's around 80% of the total lead available. The price of the battery is around 80% of the total lead metal available in that battery when you import that battery. Whereas in India, it's somewhere around 58 to 60%. So it's around 90% of the total lead available in that battery if you buy it in India. But there are certain places where we are procuring it from. We have our own yards in Africa where we get this lead acid battery at around 40% of the LME prices also. So it varies a lot depending on which geography you are in, where you're buying it from. Either you're buying it from your own yards or you're going to aggregators and buying it from there. So the prices would change drastically depending on the geographies and the mechanism. Coming to Coming to the energy cost of recycling vis-a-vis mining, it's approximately 1/4 of the total energy cost is used if you are smelting it by recycling as compared to mining. And in case of aluminium, it's 120. It's only 5% of the energy that you consume when you recycle aluminium as compared to when you do mining of aluminium. So it's very energy efficient.
So in terms of units, what is the power consumption for lead smelting?
So in recycling, generally it's not the power, it's the fuel that is important, because for smelting you use fuel and not power is very minuscule. The major part of energy that is consumed is through in way of furnace oil or gas or coal or any other such thing.
Okay. Okay, sir. Thank you.
To give you a picture, I think for every ton of lead that we produce, we use around 50 liters of furnace oil.
Okay, so that is the main fuel component.
Yeah, that is a major component.
Okay.
And for that also we are using rubber and tire recycling and we are kind of replacing the fossil fuel and using tire instead of fossil fuel. So we're using pyrolysis oil to replace fossil fuel for our smelting processes.
Okay.
Thank you, sir. We take the next question from the line of Mr. Kush Nahar from Electrum PMS. Please go ahead, sir.
Yeah, am I audible?
Yes, please.
Yeah, thanks for the opportunity, sir. So I just had two questions. One, what would be the percentage of domestic sourcing this quarter?
Yeah, so domestic sourcing percentage is close to 20% in this quarter, but on H1 basis it is approximately 27%.
Okay. And so just want to know that are we maintaining on the volume guidance as said earlier around 20 to 25% for FY24 and going ahead for the next 2-3 years, seeing the demand slow down?
Yeah, correct. So that guidance is given for till FY27. So that guidance is continued of 25%. So as I mentioned earlier also, we are not affected by slowdown that much in lead business because we already have tie-ups with OEMs, and also as Vijay mentioned earlier that the total capacity that we have is hardly 2% of the total global requirement. So the slowdown will not affect us. That is one part. The second part is that this is only, as Sunil also mentioned, this is only a temporary setback. In the longer terms, I think in aluminium and plastic will come back to the same position that was there last year. So in the longer run, in the next 3 years, 25% growth rate is not at all a problem.
Okay, sir. Thank you.
Thank you. We take the next question from the line of Mr. Ketan Athavale from Robo Capital. Please go ahead, sir, with your question.
Hello. Thank you for the opportunity, sir. I wanted to know what revenue growth can we get in this year, FY24? Will it be slightly lower than 25%? And also, what is your EBITDA margin guidance for FY24, 25 and 26? Thank you.
So revenue growth in H1 is approximately 22%. We are giving it volume guidance of 25% growth on a longer term basis, so which is the target for us. So there may be some fluctuation in the prices, so that may be vary from year to year or quarter to quarter. But yes, we are confident for taking a volume growth of 25% on a longer term basis.
Margin guidance?
I'll just elaborate it a little bit more in the sense that our focus is more on the bottom line rather than the volume growth in revenue numbers, because there are various factors that are important in the volumes. As I mentioned, that sometimes we also have arbitrage opportunities where we bring in some of the material that we source outside into India, and therefore it does not get reflected in the when you consolidate the numbers. So the volume growth shows a little lesser than the total production that we've done. So that way the volume growth may not be the right reflection on how much production we have done or how much volumes we have done overall, because it gets eliminated when you bring it to India and then sell it from India. So that is only because we want to increase the bottom line. So those numbers can change, but our guidance on the bottom line of 30 to 35% growth on the PAT numbers are intact, and we are very confident of achieving that in longer run also.
And in addition to that, we are also focused on taking the minimum ROC of 25%. So that's also one of the, because there is a different kind of businesses and different kind of businesses involve different kind of working capital also. So to be more precise on the bottom line, that's ROC, return on capital, is the more precise number we follow, and the target is minimum achieve 25%.
Okay, thank you, sir. Thank you so much.
Thank you. The next question is from the line of Jenish Karia from Antique Stock Broking. Please go ahead, sir.
Yes, thank you, sir. The first question is with regards to the capex. So for first half, we have done around 54 crores of capex as per the cash flow statement. We are guiding for around 205 crores of capex in FY24. So will second half be capex heavy, or do we see some slippages in the next year?
Yes, so approximately 54 crore we have done in the H1, but H2 may have another 100 crores, and part of plan of H2 may carry forward to the next year, maybe first half of next year. So that will be incurred in that part. So maybe 50 odd crores will it will carry forward to the next year.
Okay, and the 100 crores that we plan to spend in the second half, will it be majorly for the lead overseas business, or which verticals will it be allocated?
So basically it's for the existing vertical capital that we are talking about, and it's not 205 crores per annum, because it's around 150 crores per annum for the existing verticals we were talking about. So we would be completing that 150 crores for current verticals in this year. Apart from that, in another verticals, we are expecting to incur around 45 crores this year, and then 100 crores next year, and the 100 crores next year. So in the existing verticals, we are in line. It's the new verticals we are talking about. We are talking about lithium, and we are in discussion with. So we are doing our feasibility. We are completing our feasibility for paper and steel plant in Africa and Central America. That may get postponed to the next year. I mean, some of the capex in those two lines may get postponed to next year, spill over to next year. But the existing verticals in line with the total 150 crores that we are talking about.
Okay, that's helpful. The second question is, why is the domestic sourcing for India plants declining over the last 4 to 5 quarters?
So it's basically, again, we've talked about this earlier also. Sometimes there is an arbitrage opportunity where the overseas market is more price, effective as compared to the Indian markets. There is a difference between the prevailing prices overseas compared to the Indian markets. During those times, we import a lot of batteries into India, and on other occasions we export a lot of material from India also, whenever the prices are the other way around. In last quarter, in Q1, because the prices there was a huge arbitrage opportunity, so we imported a lot of battery into India. Because of that, there was surplus of batteries availability to us. So because of that, we hold procuring any batteries both from overseas also and in India also. So that is one of the reasons. Otherwise, there is availability, but when there is availability, we choose the scrap that is cheaper to us. So it happened in last quarter, but from next quarter onwards, you will see improvements in the domestic battery scrap also. It's not because of non-availability of battery, much more it's the availability because our capacities are limited. So it is dependent on the price of battery that is available to us.
Okay, so just a follow-up on that. So in prior to FY23 and FY22, the proportion of domestic sourcing for India plants was upward of 50%. With battery waste management rules getting implemented from FY23 onwards, the proportion of sourcing from India has gone down. So is it because of the rules being implemented, the domestic sourcing has become costlier and we are finding it economical to import it? Is that understanding right, or I am missing something?
No. Batteries have always been cheaper overseas. We are increasing our capacities because there is huge opportunities in the local space also. But at the same time, we are increasing our procurement yard capacities overseas. So the overall capacities are increasing, and the overall battery availability is also increasing for us, both from Indian market as well as from overseas market. But we pick and choose which is more price efficient for us, and that is what we do. So at the back of it, both prices as well as the ROC is important to us. But when you see there is a huge arbitrage between overseas batteries and domestic batteries, during those times only we buy more overseas scrap as compared to the Indian scrap. Having said that, we are already increasing our capacities in India. We have increased the capacities in Mundra, and we are continuing to increase our capacities so that whatever scrap is available, we can use that scrap also.
Just to summarize, that the spreads between the overseas and India battery right now have widened. Once it narrows down, we will increase our domestic sourcing, right?
So if you look at the overall numbers compared to last year, we have procured 40% more batteries as compared to last year.
Okay.
In India.
And just one last thing, on the reporting part, we used to earlier report our profits from the overseas business as a percentage of total profit. We have stopped it from the last 2 quarters. If you can just give me those numbers.
Sorry?
Earlier, we used to report our overseas profit as a percentage in our presentation. So that has been stopped in the last 2 quarters. So can you just help?
Actually, earlier there was a concern about the Indian profits being too low. So we were always mentioning that Indian profits, but if you want, we can start it from next quarter again.
That would be helpful, sir. And if you can just give me the last 2 quarter numbers.
I probably will share it to you offline.
Yeah, no problem. I'll take it offline. So thank you so much for your time.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone phone. We'll take the next question from the line of Mr. Navneet, an individual investor. Please go ahead, sir.
Hi, sir. Can you tell me the market share that you have in lead recycling right now?
So it's a very fragmented market. It all depends on which geography you are present in, because we are not present in the developed world where most of the battery get consumed. We are not there in Europe. We are not there in US. So overall global market share would not be available. But when we talk about Indian market, of the total organized market, we have around 15 to 17% market share in India. And whenever we are present in Africa, whichever country we have more than 50% market share in all the countries that we are. So we are a major player in most of the countries.
And so organized market would be what proportion in India?
Around 30% of the total market would be organized, 30 to 35%.
Got it. Do you have similar numbers for your plastic and aluminium business as well?
For plastic, it would be very difficult because most of the plastic business in India is unorganized. There is hardly any, not more than 10% would be in the organized sector, around 90%, more than 90% would be in the unorganized sector. For aluminium, I'll just hand over to Mr. Naveen.
In aluminium, mostly India is importing scrap because the local generation of scrap is very less. So that volume is Percentage-wise, very low. You can say our capacity here, we have around 15,000 tons per annum, and alloy market should be somewhere around 7 to 8 lakhs. So percentage is maybe 2%. 2-3% only percent.
Right. On the aluminum and plastics business, before you grow it aggressively, would you want to sort of develop that hedging plan, or irrespective of whether you can develop the hedging plan or not, you would continue to invest heavily in these businesses as well?
See, there are two aspects of this business when we recycle. One is when you use this EPR, like we are doing it in lead recycling. Also, we have tolling business availability. So part of the business would be tolling business as we grow, especially in plastic, more and more because of the EPR, extended producer responsibility. There you would not require any hedging. But for other businesses also, so hedging is important, but business proposition is more important. So I'll just give you an example, because what happens when you don't hedge is that your quarter-on-quarter variability in profit would be there. But that profit does not go anywhere if you keep the same stock, even whether there is a hedging mechanism there or it is not there. It will only affect your quarter-on-quarter profit. So if you keep the quantities constant, if you keep on buying regularly throughout the year, then whenever there is a change in prices, again you will start getting the benefit of the stock that is already there. So it will not affect the actual profits. It is just a notional profit that get affected.
I understand. So currently, in terms of profitability, at least in this quarter, these two businesses contributed quite insignificantly to your overall firm. So when do we see these businesses contributing, say, upwards of 10% at least to your overall business?
Yeah. So definitely we are increasing volume. If you see in the last year, we have increased the capacities of aluminium by more than 100%. I'll just give you the figure 200. I think just one second. That is one thing. And if you see last year also, the profit from aluminium was high because the prices were high. This year you are seeing because the prices have come down, so the price of my inventory has gone down. Once there is a reversal in prices again, the prices of inventory will go up again, and that profit is already intact in the inventory. So it has not gone away. Although notionally, because you present it despite that, on the current business also, 11% of the EBITDA comes from aluminium and plastic.
Okay, understood. And when do you think...
And another 8% comes from turnkey solutions. So lead is contributing 81% of the total EBITDA currently.
True. So when do you think you will be able to get some...
I'm sorry to interrupt you, Mr. Navneet. May we request you to join the question queue, sir? We have several participants waiting for their turn.
Sure. Okay, thanks.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your question to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. We'll take the next question from the line of Mr. Rohan Vora from Envision Capital. Please go ahead, sir.
Hi, thank you for the opportunity. Sir, I would like to have your views on how different the sourcing ecosystem would be for lithium, paper, etc., the new businesses. How different would be the sourcing ecosystem?
The sourcing equipment, I think it is very similar to the tolling business that we do, where you'll have to have tie-ups with the OEMs and collect battery on their behalf from their workshops, and also most of the business would be that way, where you have relationship with the OEMs, either battery manufacturing OEMs or car manufacturing OEMs, which is very similar to the Indian business that we are doing. And also some part of it will be the retail batteries that are being used by e-rickshaws and all, especially in countries like India and developing countries. That would come probably through the retail network only. But that would be only a small percentage of the total business available. Other business would be very similar to the OEM's relationship that we are having in lead acid battery in India.
Okay. Okay. And across the globe, would it be any different?
No, it's going to be very similar because generally what happens, first of all, the life cycle of a lithium-ion battery is very high. And second thing is because it comes under the warranty for car, it will go to the workshops only to get replaced or maybe get changed or things like that. So it is going to be, especially for passenger car, it would be very similar to the lead-acid battery system that is in place. Whereas for three-wheelers or for e-rickshaws or maybe two-wheelers, etc., probably it will come through retail networks.
Okay. Thank you, sir.
Thank you, sir. We take the next question from the line of Mr. Shubham Thorat from Perpetual Capital Advisors. Please go ahead, sir.
Yeah, thank you for the opportunity. Am I audible? Earlier, one of the earlier answers, you mentioned that even if the lead acid battery share in the auto space will be declining, there will be other applications that can support our lead division. So can you delve deeper into what applications are we looking for?
Yes, the other application will certainly grow as country is growing, per capita income is growing. So the storage energy, household batteries, their lead demand will certainly go. And telecom towers, they will keep growing. So cable industry, alloy cable industry, so smart city, storage and solar. As of now, solar is mostly used on grid, off grid. So later on, they will be using societies or housing societies will be storing energy in lead-acid battery only. So those sectors will grow, and their demand will be even bigger.
Yeah, thank you.
Okay.
Hello, Mr. Shubham. Hello.
Yeah, we can take another question.
Sure. The next question is from the line of Mr. Hemish, an individual investor. Please go ahead, sir.
Hello. Am I audible?
Yes.
Yeah. I just had one question. When you mentioned that, the rubber recycling is now being used, so rubber is now being used as a fuel. So should it not, increase your margins going ahead as you keep adding more capacities for rubber recycling?
Yeah, definitely it will increase the overall profitability for us because it will reduce the cost of fuel wherever we are using it. So definitely it will have some marginal impact on the overall profitability of the EBITDA margins as we increase the capacities. So far we don't have any rubber recycling unit in India, but now we are in discussion of putting up a continuous process, which is a state-of-the-art process, which is currently not used in India, to start using that for our Indian plants also.
But in addition to the margin improvement, it will have better and more impact on the environment side. It will be better for the environment as we are not using fossil fuels as an impact.
Correct. Okay. And the second question is how much time. So when you talk about the new avenues of paper recycling and lithium, how much time does it take for the plants to come up on stream? Like if you start by Q4, how much time does it take for the plant to get set up?
So it all depends on the total from country to country. How much time would it take for you to take approvals for a particular plant? Because these categories are, especially paper industry is very critical environmentally. So sometimes it takes a lot of time for clearances also. But generally, once you give a go-ahead from that point to installing the project would take around 1 to 1.5 years.
Okay. And sir, QOQ, your margins have gone down. Now, is this because of, because of the notional loss that you would have on, your aluminum business? Is it partly because of that? And if you have the amount if there's any store, inventory loss that you have there?
Yes. So some of the notional loss that we've got is part of the notional profits that we got last year. So we've always stated that the average EBITDA margins is around 17 rupees in aluminium, 16 to 17 rupees per ton per kg in aluminium. Last year, that profit was 20 rupees because the prices were going up regularly. Once the prices came down, so whatever we have gained in inventory last year got reflected in the profitability this year. But some part of the profit are still in the inventories. If the prices go up again, we'll again start seeing some better EBITDA margins going forward.
So this is for aluminium, but in case of lead, we are very stable on the per ton EBITDA margin. So normal EBITDA margin is in the range of 16 to 17 rupees per kg. We are very stable. Sometimes we get slightly additional margin on account of arbitrage opportunity by selling more into India when the Indian prices are higher, and by selling some more quantities in overseas when the international prices are higher. So that we arbitrage, because we are present in both the markets, we take the advantage of that. So sometimes, some quarters, it is higher, but normal margin is 16 to 70 rupees per kg, which we are maintaining.
Okay, no problem. Thank you, sir. Thank you so much.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you everyone for participating in this call. At the end, I would want to mention that Gravita has made a niche for itself over the last 31 years, and our strong performance year on year is a testament to our fully integrated business model which covers all the key aspects of recycling. Our strategic position as one of the few recyclers in the formal sector is supported by strong sectoral tailwinds like stricter government norms of BWMR and EPR. Our pan-India and global presence, integrated supply chain, operational excellence and strong risk management framework makes us a preferred partner of choice for OEMs across India and gives us confidence to meet our vision 2027 of diversifying into new business verticals and achieving revenue CAGR of 25% plus, profitability growth of 35% and ROC of 25%. We trust that we have addressed all your inquiries during this session. However, if there are any remaining questions, please feel free to reach us to our investor relations team at Go India Advisors. Once again, we extend our gratitude to all of the participants for joining us and for your attentiveness to our updates. Thank you and have a great day. Thanks.
Thank you, sir. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.